let's get some facts. 37% of you aren't subscribed to this channel. That's almost 4 out of 10 just freeloading the alpha. So come on, hit subscribe and I promise to keep leveling up the show with the best guests and the juiciest insight. Go on, do it now. Join me, Raoul Pal, as I go on a journey of discovery through the macro, crypto and exponential age landscapes. In The Journeyman, I talk to the smartest people in the world so we can all become smarter together.
I have like very little time or patience for like people who only write negative articles. What I don't get about Peter Schiff is, he seems like a very smart guy and I've never met him before, but the world is not black and white. Like there's room for gold ownership and Bitcoin ownership. And so and by the way, there's room for tokenized gold ownership, Bitcoin ownership, physical gold ownership if you want
ETF ownership. Yeah.
It doesn't make a difference. Like it's not as if you have to put all of your assets in one class. And by the way, you shouldn't be putting all of your sort of like assets in one bucket. But I think that people sometimes dig their heels in, and it's hard to undo people's perspectives. Like when I'll never forget when I took time into Web3, right? A lot of people called me up and were like, what the heck is wrong with you? Right. When the article came out, in Yahoo back in, I think it was like March of 2021. And when the article came out that we made as much money as we made, a lot of people changed their mind and were like, oh my God, this is a real business that you can actually launch. At the same time, it wasn't until we did Artists for Peace and we started to use crypto to start to show that it can be used for good efforts that people started to really change their tone. And, one of the things that I feel has always changed people's perspective is when you could show that the crypto community is actually providing good to the world and is not just a financial tool or an efficiency play. And that's hard because it really is an efficiency play and a financial tool. And so I try to apply it wherever I can, which includes my initiatives with New York Cares. And you're going to see a big one come out, in a few weeks for Stand with Students, where I, with everything that's going on in New York, I went to a bunch of these New York based companies. And I said to them, look, I sit on the board of New York Cares, the largest volunteer network, in the city. I oversee and chair Stand with Students, which I've done for the past 5 years, which helps the Title I schools, right? And what I'd really love to do is I'd love to show that the crypto community cares about people other than themselves and the community and crypto technologies. So I'd love for you to participate in this, right? And, the overwhelming response has been incredible. Everyone from the Solana Foundation to Ripple to Dapper Labs to Exodus to, Broadlight to FalconX, and I can continue to name on and on and on, have stepped up and said, we want to participate and have donated. Right. And, Cake Wallet was another great one where it's like people you wouldn't even expect, but are building a business in New York are saying, we want to stand up to help this New York environment when there's a little chaos. And we know that New York is trying to do good for the crypto ecosystem too. I think that helps people wrap their head around crypto and starts to sort of nullify this.
I don't know. The FT will say crypto bros try and bribe the city by, what that's all. Anyway, it's just a very frustrating thing. And again, as you say, once social consensus is fully behind something, the opportunity has actually been captured already.
Yeah, I will say this is, it's really hard for me to feel like I'm comfortable being called a bro. There was an article in Decrypt the other day referring to crypto on-ramps as sexy. And I was like, this is fantastic. I'm sexy now. I'm very rarely sexy. I'm very rarely a bro. I just want to build, right? I like this, right? At the end of the day, the world is just getting faster, more efficient, cheaper. We're seeing that AI is accelerating things, ML is accelerating things. And guess what? The only technology that can keep up with those accelerations are blockchain technologies, right? And so it's all the same sort of trend line that's taking place. And I'm just having fun building with it. And I think you are too.
So what is your crypto journey? How did you end up in the ridiculously difficult idea of trying to build a mobile phone for Web3 network?
Yeah, I was not actually super deep in crypto at the start of this. I was at Google before I was here. And before that, I did a consulting gig where I was building primarily mobile apps for a lot of the big Fortune 500 companies, right? Like in the mid-teens, there was this moment of realization where every big company realized, oh, our mobile strategy is terrible. Like we have terrible apps, nobody wants to use them, terrible mobile websites. And so I really kind of built a love for the mobile space first. How can we build great apps that people want to use no matter where they are? And then as I entered Google, really was primarily focused on AI. So it was this concept of, there's an emerging technology that's maybe not quite ready for mass adoption yet, but what can we do with it? And so that love of mobility and that love of cutting edge tech that maybe is still trying to find its way to mainstream led me to this opportunity with Solana Mobile. And so I had a colleague who had been at Google for a time, and he made the intro.
Who pitched you the idea of, hey, come to a Web3 network, which you probably didn't know of, that had gone through the wars and said, oh, look, I've got a really good job for you, Emmett. Why don't you come and build a mobile, help build a mobile for this? I want to hear that pitch.
Yeah. So the way it started was the person who I knew at Google, who was running payments at Solana Labs at the time, he said, hey, you get emerging tech, you get mobile. The team is doing something that's totally crazy, totally ambitious. Hear them out. And I was a little skeptical. I did know Solana, I did know crypto, and I held I had a portfolio, but I really wasn't like actively using apps and trading all the time. But I said, sure, I'll take the call. Like, I trust you. And so I met with a few of the early team members. There was basically one full-time hire, this guy, Steven, who was effectively the founding engineer, who was hired by Anatoly to kind of get this off the ground. And then there were a few other Solana Labs folks who were supporting. They weren't full-time mobile people. They were kind of doing other Solana stuff. And I just picked their brains. I wanted to learn more about what they were doing and why. And they each gave their own sort of earnest version of the pitch. But to be totally honest with you, I'm not sure everybody really knew what we were doing and why back then. So there was no concise version of the pitch. I was mostly reading the opportunity space. The one thing they were all super clear on was like, hey, crypto is going somewhere and it can't get there without being successful on mobile. Like they all totally had that vision down. And they were just really smart. I could see that there was a big opportunity space, and doing something from 0 to 1, including building a phone, seemed like too good of an opportunity to pass up. And I'm very grateful I took the opportunity.
So now you've been working on it for a while. What's the vision? What are you trying to do?
Long term, we want to build a new type of mobile platform. If you look at what's been built so far by Apple and by Google, it's a kind of known model, right? They build a bunch of software and some tools, and they say, hey, developers, hey, users, why don't you guys come together? We'll introduce you. We're going to take 30% of the action and we're going to set the rules of engagement, but we'll get to build a whole bunch of hardware in the Apple's case, or in Google's case, we'll build some hardware, but we'll also license the hardware to some other people, or the software to some other people. And it's been primarily in service of other revenue for them, other services revenue, other hardware revenue. For us, we don't see a world that crypto fits neatly into that model. The idea of giving up 30% of peer-to-peer transactions or no middleman transactions, it just doesn't work. A lot of the tooling that's been built to support really seamless, really easy Web 2 transactions like Apple Pay or Google Pay, there's not really a Web3 equivalent of those technologies.
Because they're not incentivized to do it, really.
No, they're not incentivized to do it. It doesn't work with their business models. They wouldn't want to start eating their own opportunities. And so really what we're out to do is build a new type of platform, one that's open, one that's crypto native, crypto first, but actually services mobile users. And so our path to that has been through building our own phones, which sucks. It's like very expensive and very hard. But it's been great. We've got the opportunity to learn a lot. We get to connect directly with customers. But long term, we think of ourselves very much as a platform provider. And so we'll always sell our own phones, but we want to bring this to as many phones as possible, not just the ones that have our brand on the back.
And so if we were to look forward 5 years, what does that ecosystem look like? What is the phone at that point? What is it? Because we don't even know what phones are going to be in the future because of AI anyway. I mean, there's a lot changing, but what's in your head? Is this the marketplace for Solana? Is this the marketplace for Web3 and the tooling for the overall what is your, where do you think we are in 5 years?
we're Solana first. We think Solana mobile, well, we think Solana is going to be the place where mobile is successful. It's fast, it's cheap, it scales. These are all things that really matter in the mobile context. So I inevitably think this will be like the nexus of Solana activity. You know, in 5 years, I can't imagine a startup launching on Solana and not having an associated application available on our platform. I think as users move more and more towards mobile and their expectations grow higher and higher, you know, historically it's been build a desktop app first. That's where traders sit all day, and maybe eventually we'll build a mobile version of the thing that kind of works. I think that'll be totally flipped in 5 years. Probably
it creates network effects by having your own platform.
100%. Yeah. And we get to we're starting to see more competition, right? Like in the early days, we really had to muscle it. We had to like chase the teams down who were part of the ecosystem and say, hey guys, we're doing this thing. It's really important. Here's the vision. Like, please believe in it and build something with us. And now that's kind of reversed, where we have a lot of teams who say, oh, our competitors are in there. Oh, we're a trading platform. Like, we can't be the last trading platform. We have to be the first one, and we have to offer better features. And so a lot of the benefits of building a platform that you don't really start to see until you reach that little critical mass of flywheel adoption, we're like just now crossing into, with 150,000 seekers being shipped out. That's enough of an addressable market to get most of the ecosystem teams who see the opportunity in and building with us.
Yeah, it's actually very clever, because what it coalesces attention into one place, because if not, it's the internet. And so then there's all the other all the other apps and everything else. But if you coalesce attention to one place in a delightful piece of hardware that has a good UX experience, then suddenly it creates network effects. And as you said, at 150, if you're trying to get 150,000 users, that's 10% of the daily active users, 5% of the daily active users. And that's a big enough bootstrapping of a network to create network effects.
Totally. Yeah, it's absolutely enough. And, you know, not only is it a reasonable enough audience, it's a growing audience, and it's a high spend audience. One of the things we saw when we launched our first device, Saga, was the initial adoption was really light, right? We didn't sell as many devices as we were hoping to. And eventually our fortunes changed, the market shifted, and people saw an opportunity to buy the phone. But the one thing we did see was the people who bought the phone used it constantly. They were constantly trading. They were constantly buying things, selling. And so that activity story of, this is where the whales of Solana are going to land, this is where some of, you know, the growing user base is going to be, is really compelling for builders. And so if they get some consistent technologies to make the experience super delightful for their users, they don't have to worry about the hard stuff. They don't have to worry about the wallet infrastructure and trying to make it work right on a mobile device and overcoming some of the built-in restrictions that phones have. They can just build a great app and give users a great secure signing experience. We're pretty confident that they'll just continue to innovate and try new stuff. And we're already seeing that. So I think it'll continue to be a focal point for the growing Solana ecosystem and potentially additional ecosystems in the future.
The secret to being a great investor is seeing the world 6 months ahead. The macro investing tool at Real Vision helps you understand the macro seasons and allocate your assets accordingly. It's like having a crystal ball, pure alpha, from myself and Julian Battelle. You can try it out by signing up for Real Vision Alpha, for 30 days. The link's below. Let's start with the global liquidity picture at top level, where we are from your framework, where we are from your understanding, and then we'll dig in some of the regional stuff, because there's lots of interesting things going on. I read your note this morning about Japan. I think that's interesting as well. So at top level, where are we in the liquidity cycle? What are you seeing?
Well, the answer is we're late. It's not inflecting downwards yet. We're still in an upswing. But, you know, we've got to remember here that the liquidity cycle is, 34 months old. That's pretty mature as things go. We got to be thinking of what could be the end game. I don't think there's anything on the horizon that could necessarily disrupt things, but you know, there are clearly problems building. And I think, you know, as we look into 2026 and probably beyond, I mean, there are factors to think about. And to my mind, I mean, the two biggest factors, I mean, number one is that there's a lot of debt that's got to be refinanced out there, because debt was effectively termed out during the COVID crisis, large amounts when interest rates were zero. And that's coming back into markets to be refinanced really from sort of later this year, but through 26, 27. And the other thing we must, you know, remember is that, strong economies don't always have strong financial markets. And the fact is that you've got US tech companies currently investing, what is it, $1 billion a day in IT and infrastructure. And, over the course of a year or so, a couple of years, that's going to take about $1 trillion out of markets, out of money markets. I mean, these are big amounts. So these companies may be seeing decent profits growth, but their cash flows are really plunging. And that's got to be a problem for financial markets in particular.
So let's dig in a little bit to the slowness of this cycle versus others. From our work is like, normally the liquidity cycle peaks around the business cycle peak. They're all, related. And the business cycle has been super low. If you look at the ISM, it's been below 50. And the strongest correlation to that is rates have been too high for too long. And that has kept the ISM lower than expected, which means it feels like it's elongated the liquidity cycle. So that's one factor that I'm looking at. The other one is the fact that they've been shoving everything into the bills market and not refining, in, let's say, the 5-year sector, that's kept this cyclicality. And I don't know if that structure is changing things because it requires ongoing liquidity as opposed to cyclical liquidity. So firstly, the business cycle and interest rates, and then, whether the structure of where they've been issuing makes a difference.
Yeah, well, I think the first thing is we don't seem to have a business cycle. And if you look at almost any economy since the COVID crisis, everything's kind of flatlined. So there's no obvious business cycle around. And, we can conjecture as to why that may be. Is it because fiscal policy is dominant? Whatever. But the fact is that there's none. There is a liquidity cycle, and that seems to be paramount. And the interesting point is, which I'm sure you'll attest, is that, financial markets are responded not to the real economy, they're responded to the liquidity cycle. That's what's going on. So we need to understand this, like it or not. I mean, it's become the paramount issue in markets as far as we can see. So I think that's true. And I think your point that about bill issuance is really critical. And, the way that we've sort of, I suppose, explained this before is to say what you're getting is a transition crudely from Fed QE to Treasury QE. And the Treasury are basically coming in and issuing a lot of bills. They're starving the market of long-dated coupons. So there's not the liquidity absorption that you would expect. People are being forced into the short end. Two things really come from that. I mean, one is that there is lower volatility in markets as a result. And in fact, we know the Treasury is very keen to actually keep volatility down, given the way they've upped these buyback programs. So that's significant. And if you get a lot of bill issuance and short-dated note issuance, the banks buy it with alacrity, because this is the sort of security the banks like that matches deposit growth. And if the banks are doing that, they're effectively monetizing the deficit. So I think that's the route to a trend increase in liquidity over the medium term. We know governments basically have to find ways to fund themselves. And what better through this mechanism?
And do you think that this stops them issuing at the longer end? Or is it just a delayed process until they can get rates lower? And we'll come into that in a little bit. But is this a structural change that's going to ongoing? And because it's bills, that feels like ongoing stimulus, and it might change this whole cycle?
Well, I think the answer is that it continues until it doesn't. And the fact is, we know that these things always end badly because they tend to end in inflation. And that's the experience we've had in the 1970s. So it's going to go on as long as it does. And then it will be forced to stop, presumably, by concerns over an inflation pickup. Now, I think everything they're doing is trying to bury that inflation news by whatever means, fair means or foul. So we're never too sure what the inflation rate is. And I'm always, instructed by the fact that, one's personal inflation rate is always way, way above what you read in the CPI. So there's obviously a lot of manipulation going on anyway. But the fact is, you've got inflating asset markets, which is really attesting to the fact that you've got strong monetary inflation. And monetary inflation is not just a cycle as we know, it's a trend. And that trend is accelerating. And I think what the world doesn't realize is that things have changed dramatically since COVID. We're in a world of monetary inflation, monetary debasement. It's not, as I keep stressing, it's not one of financial repression. It's one actually more, it's worse than that. It's actually monetary inflation. And you've got to start thinking about how to invest in a monetary inflation world.
Yeah. And, and both of our hypotheses is, long duration assets tend to do very well in that environment. And we've seen that with technology stocks and crypto. Gold has acted very well in this environment, as it should do. And, all the signs are there that the debasement is ongoing and it's not going to go away. One of the things that is interesting to me is obviously Trump and Bessent are focused on what they can do with the Federal Reserve. The shenanigans around changing the governor and various board members. Clearly, they want to see if they can force interest rates lower. I think personally interest rates are too high versus GDP or whatever your kind of real interest rate measure you look at. And that there's room for rates to come down 200 basis points, which allows them to refinance again. Any thoughts on the kind of Fed board shenanigans?
Yeah, I mean, I'm cynical enough not to think it really matters too much. I mean, at the end of the day, I don't think the Federal Reserve really controls interest rates, certainly across the curve. I mean, it's rather the other way around. Long-term rates tend to drive the Fed rather than vice versa. So, ultimately you've got to say, well, okay, what's the fair value for the long-term bond? And that has to be related to nominal GDP growth ultimately. So you're talking of something like about 5%. And then you take what is a normal spread between the short end and the long end. What is it? 125 basis points. So that gives you your benchmark for Fed funds. So there's not much they can do sort of either side of that. And they can dance on the head of a pin and come out with their projections. But in reality, the FOMC doesn't have that much sway, I don't think. It's really a signaling tool more than anything else, as far as I can see. What matters more is really the balance sheet, what they're doing there.
Yeah, I mean, although the other side of this is we're all kind of expecting yield curve control in some way, shape or form at some point, just because of the debt refinancing mechanism. And one of the things is interesting is, and I only read about this morning, that there is some changes in the Federal Reserve Act that may allow them not to pay interest on bank reserves, which would force it into the bond market. That feels like, a backhanded way of yield curve control by forcing banks to go further out the curve. Does that factor in at all?
Yeah, it could be. I mean, I think there's a lot of it, all these things that they're lining up, whether it be elimination of the SLR, the supplementary liquidity ratio, whether it's changing stress test rules, all these things are really trying to give the banks more capacity to buy government debt. And we know ultimately this is what tends to happen in a monetary inflation. Banks tend to come in and buy government bonds, then monetize the deficit. And that's the route to funding. The question is, how quickly are we going to get there? Or how quickly we get there and inflation really becomes the issue. I think they can probably push inflation down over the longer term. And I think there's a lot of factors in there in the equation, as you will know, things like AI, which are probably going to depress consumer prices. But at the end of the day, what makes all this very confusing in a way is that high street inflation is very different from monetary inflation. And you can have a background of strong monetary inflation, but because you get, cost deflation, in other words, productivity wins or cheap Chinese goods, the high street's less affected for some time. And ultimately, investors have got to invest around monetary inflation, the debasement of the currency, much more than what they're seeing in the high street. But it will come through in the high street at some stage.
Yeah, and it usually comes up as the business cycle picks up as well, if it does pick up, which I think it does. The other thing that's been interesting to me is the shift in how the Fed and the Treasury have kind of managed the debasement. It started simply with the balance sheet. Then everyone kind of figured out that game, and then it turned into this Fed net liquidity game. And now it's gone to what we look as total liquidity, which is including the private sector, because they're now using the banks as their main mechanism of debt monetization. Does that make sense to you?
Makes complete sense.
Yeah, well, I mean, let's talk about like market psychology. I think every cycle is different but the same, and it just feels like the scar tissue from the last cycle, which we all felt, is manifesting in a lot of the commentary that's coming through at the moment. Right?
Yeah, agree.
Now, it's a 4-year cycle. This is when it has to end. Therefore, it will. Last cycle, it was like to the moon forever because no one is keeping an eye on, or no one really, there were people such as yourself who were really getting a good handle on it. And it was really in early.
No, even I failed in the last cycle because I thought there was another leg to go. So,
yeah. So then everyone's sort of I guess, truncated this cycle, and for good reason. It's not without, that there are frameworks out there that are credible, that should say that, this is, a time when things start to get, peakish. But we haven't had the typical business cycle, and not many people do that business cycle analysis that you and Julian do. So that framework that underpins everything at Real Vision and GMI is sorely missed elsewhere. But it just feels that, it's a mechanical response to like the market, that this is now when we should be peaking. And it's been interesting to see the commentary flying on Twitter and everyone else, and even within our membership here, about is the top in. So I'm always fascinated by market psychology and how it manifests in the market. I also think what's quite interesting is that everyone is very attuned to the liquidity cycle aspect now, and how that is going to change the outcomes in the future, as much as we think that we've still got more to go. And all those things are they're the unknowns, but the framework that, we have here is very, I think, very clear that we have got more to go. I've got we've talked about like my Bitcoin cycle risk framework and the topping indicators that I've been building. I mean, they're not screaming at me euphoria. There is definitely, and I highlighted this in that last report, Raoul, trend exhaustion signals in the Bitcoin chart, and fundamental deterioration as well. But I think that's a function more of the transition into higher beta crypto through ETH primarily.
So the falling of Bitcoin dominance, which is typical of this point in the cycle anyway, right?
Yes. Yeah. And that transition really started, second quarter, but it was very clear by sort of July, when I was on paternity leave, that transition had occurred, because I looked at the on-chain data on Bitcoin, the ETF flows between Bitcoin and Ethereum, and obviously the price action. And it very much lines up with, that transition period in the crypto market from Bitcoin dominance to high quality alts, not, a dash for trash sort of market that we saw in 2021 when people were getting stimulus checks, but a high quality alt season run at the moment. So that's kind of where I'm at.
And when we talk about the high quality alt season, I want to see where your head's at. My head's at is quality layer ones, revenue generating projects, and a few big things that capture attention, whatever they may be, that don't come with revenues or anything else, but they capture attention. We're seeing, Hyperliquid's obviously one of them, maybe Athena's another. We're seeing obviously Sui, Solana. How are you thinking this next phase is, and what are the types of tokens that participate?
Yeah, I like the way that you've just distilled that down into a very clear sort of representation of what really matters. Cash flows, are there protocols that are fundamentally strong, meaning that they have cash flows, they have usage, they deliver utility, and have very strong tokenomics? And there are a handful of those, and they are being rewarded by the market as they should. I've always had this view that as the asset class grows, and as the, for lack of a better term, sophistication of the marginal new investor comes in, that they're going to look at fundamentals more and more. That's always been my base case. And I think that's playing out. I mean, you mentioned Hyperliquid generating a huge amount, generating the sort of cash flow or revenues that would make a, NASDAQ 100 company sort of water, like in terms of just the growth. In terms of like the multiples, I know we're not talking like for like, but in the case of Hyperliquid, it's trading on a revenue multiple that would put it, in the median of a tech stock in the S&P. But it is those high quality tokens, L1s, and the DeFi protocols, and the things that will grab attention, because that is not going away. Memes are definitely not going away. In fact, I'm starting to entertain maybe my first meme position, which we can talk about later.
So you obviously like this video enough that you've got to the end. That's quite a big task. But listen, do me a favour, hit the like and subscribe button, and also check out what video's next, because I think you'll love it. But if you want even more, and when I'm talking more, I'm talking about member-generated ideas, incredible alpha, research, everything there to help you in your journey, just head to realvision.com/join for the best financial intelligence out there and the pure alpha that's within the platform.